Good morning, everyone, and welcome to Manitoba Agriculture and Resource Development CropTalk webinar. If you have any questions during this presentation, please type them into the question section of the GoToWebinar menu, and we will answer them at the end of the presentation. This webinar is being recorded, and you will receive a link to the recording. Thank you.
Thanks, Lori. I'd like to welcome everybody to the September 16th edition of CropTalk. Today, I'm going to start off with going through a little bit of an update, and then we're going to have Darren Bond on. Darren's one of our farm enterprise management specialists, and he's going to give us a little bit of an update on grain markets, as well as some risk management things we could look at as we start marketing and look at marketing more of this 2020 crop. From there, we'll go into the crop scouting panel and answer a few of the questions that have come in over the past week. So with that, a little bit of a crop update. I know one of the things that I've noticed over the last 4 to 5 days is the deterioration of the straw. A lot of the crops that have been sprayed for 2 to 3 weeks have definitely started to dry down, and when you see the combines going now, you sure see a lot of dust happening behind those combines or all around the combine. So definitely showing that things are starting to dry up, and fall is definitely with us. With looking at where we are right now in harvest, winter wheat and fall rye have been completed for a while, and actually we're just in the process of all those crops being planted in a lot of the areas. You look at spring wheat, I would say we're getting closer to the end of the spring wheat crop, about 82% complete right now, and it's looking like right now that the quality and the yields have been probably about average, and so I think kind of just an average crop for wheat. Barley a little bit more completed, 92% complete, and when you compare that to the 3-year average, we're right on par with that. And again, one of the things with the barley, I think, is a lot of producers have been telling me that it's looking a little bit stained. So it's going to depend now, I guess, on the maltsters as to how much barley they're actually going to need. One farmer brought up a good point the other day when I was talking to him. He said that he doesn't think there's going to be a big demand for malt because of all the sports activities that have no fans coming to them, and never really thought that deep into the whole equation, but it kind of made sense. Oats crop behind last year, and I think one of the big issues with oats this year is it's staying green for a long period of time and has created some issues for harvest for a lot of producers, to the point in some cases where some producers have gone out and started swathing it just to get it to dry down so they could get it off. So as we go into the no pre-harvests in some of these crops, that's one of the things we're definitely going to have to look at as one of our management things for getting the crop off in the fall. And I was talking to another producer the other day, and he told me that we were talking, and he said, good thing he didn't a couple years ago when the hype was sell the swather. Well, he's saying, well, it's a good thing he didn't, because he's definitely needing it this year. So field peas, pretty much 100% done. There has been some producers that still have their pea canola crops out, so they're still hanging around. So, but in general, I think peas are done. Canola, a big one. We've had kind of a stop in a lot of the canola harvest over the last 3 to 4 days here, because it just doesn't want to seem to dry down that extra 2 points to make it make it for producers to be get out there and start combining it. It's been hanging around that 11 to 13% moisture here, and with the days we've been getting with no sun and humidity or wet conditions in the morning, it's just not coming down anything. A lot of producers have their air bins and dryer bins full of cereal crops, and so the canola's been sitting in the field. So some producers have definitely come to a standstill in harvest. Looking at flax, barely just begun, and I think some producers will be looking at desiccating in the next couple of days. Soybeans, again, harvest has barely started, and in the western side of the province here, we're definitely going to have some issues with the frost that we had. So we have a question again later on today in the panel where we'll get Dennis to make a few comments. And sunflowers and corn, I think again still a ways off being ready to harvest. And silage wise for corn, I think a lot of producers are getting ready for that. I think one of the things is the corn is definitely losing a lot of its leaf from the frost here, but just as Tim mentioned last week when the question was brought up about corn silage, and he was just saying that, you know, the majority of the moisture is in the stalk and the cob, and you want to make sure that you're not too high in moisture when you're putting it in the pile. So you can see why some of that stuff is still sitting out in the field, and it's going to be a few days before we get into silaging it. When you look at harvest completion, it sits around 56%, which is below our 3-year average. At this time, we'd be about 63%. So a little bit behind, but there's been some issues that have caused that. And I think, you know, we get some good weather here, we'd definitely catch up pretty fast. Thought I'd bring this map up just to show where we've been or where we sit right now for our soil moisture. I know a lot of areas have talked about getting a fair amount of rain this growing season. Now, there's definitely been areas that haven't, but there's been several areas that have talked about getting you know, good rainfall this year. And when you look at this map, you know, when you consider where we would, you know, would normally be, where a lot of the areas are considered dry to you know, dry to just average right now. So we're not definitely in very wet conditions throughout any of the province. So after harvest, we could probably use a few rainfall events, but if it could hold off for a couple of weeks here, that would be great. Been getting quite a few calls on grain aeration, and wanted to put this website up just so producers, if you've got some questions regarding you know, grain and aerating grain, and you know, the difference between keeping grain and drying grain. I think there's definitely a lot of information on this website, and I think producers are having a lot of questions whether they can actually dry grain in aeration. And you can if you start adding heat to it. I think, again, there's cautions with all that kind of stuff, so you definitely need to know what you're doing. But there's good information on this site, so go to that. Or if you have questions, just send them to me or give me a call, and we can answer them individually. To do a whole webinar on our whole talk on grain drying right now would be actually one full webinar, and so it's better to work on it case by case. So with that, I'm going to get Lori to turn things over to Darren, and we'll talk a little bit about grain marketing.
Thanks, Lionel. So my name is Darren Bond. I'm a farm management specialist with Manitoba Agriculture Resource Development here. I'm in our Toulon office, which is in the South Interlake, and it's been an interesting year in our area. And most of the grains in the bin now still have some later season canola and some beans, most of the beans left to go. But as we're moving through harvest here, marketing starts to come up into play. And we're going to talk about some of the grain prices that we've seen shortly here. But I find that because it's a stressful time of year, there's a lot of stuff happening right now. We're starting to see some of these prices, especially in the oilseed market, be pretty attractive. It starts to get overwhelming for producers. So I always like to say that we have to take that step back when we're marketing our grain and realize what are the basics and what are we trying to accomplish when we're marketing our grain. First step is we have to know our cost of production. We're going to speak a little bit about that. Our province has some great cost of production documents. We do a lot of work on that. And from that, you can determine your break-even prices and yields. And this is the foundation piece. It allows you to understand and identify where some profitable pricing is at. So really, this is the first step to be able to have a good marketing plan and an idea of where you want to sell your grain, what you want to do with that. The next step is cash flow projections, knowing what our short, medium, long-term cash flow needs are. It's to know when these cash flows are coming in, whether it be payments, whether it be trade credit needing to be revolved, and it's combining our marketing with this timing that makes it so important. And we're actually going to talk a little bit about how COVID is affecting some of this, or could affect some of this in the future. It's definitely a bit of a wild card, and it's something that I think that everybody should take a look at on their own farm. You have to be comfortable with where you are for risk. Some people are risk averse and they don't like risk, and others are very tolerant to risk. So understanding and being true to yourself of where you are with your risk tolerances, I think it's pretty important. And of course, weather comes into play with this, the markets and what the markets are doing and what the market indicators are showing you come into this, and your financial situation on your own farm. If you're in a situation where the finances are a bit tighter, then it's probably better to be a little bit more conservative than risky, versus someone who has had a good run and the finances are in good shape and there's been good management on the farm. Then you could be a little bit riskier and trying to shoot for the higher prices. But whatever the case is, it's important to know where you are and where you fit into that, because at the end of the day, it comes down to, are you able to sleep at night with how you're marketing your grain? Lastly, do you love it or do you hate it? If you love it, you're more likely to do it yourself. You're always learning, and you're always into the market, seeing what's happening, versus someone who comes to dread grain marketing. And if you dread anything in life, you're less likely to do a good job at it. And that's where it'd be probably very beneficial to look at some of the grain marketing advisory services that are out there. And there's some great ones out there. So it's to know where you are with everything. And people always think that marketing is about getting the top dollar for your grain. And I think it's more about these things, about knowing where there's profit, knowing when you need the money, knowing what you're comfortable in doing. And if you're not comfortable in something, seeking some outside advice to be able to come to that comfort level. What we've seen here in the crop prices over the last little while, and just for some background, this is from August of 2019 till about September 11th, I think. This is our Manitoba Agriculture market and statistics pricing. And this is a weekly close, so it doesn't capture the interweek highs and lows. It doesn't even capture the interday highs and lows. This is just the weekly close. And this is a cash spot price for the three types of grain that we have here, which are the big three that are grown in Manitoba. Starting off with wheat. Wheat's kind of a bit of a boring news cycle. There's enough wheat in the countryside, and we've seen, fairly flat prices over the last little while. Where the news is really interesting is in the oilseeds, in the canola and soybeans, and it's for a few reasons. One is, especially for canola, is the frost and wind events that we've had here recently, and it's definitely put a big question mark into what is going to be there for canola. How is that frost going to impact yields? How is the wind event going to impact yields? And we've seen, and this is true with the soybean market, some good demand. China's been buying. So the soybeans, there's some production concerns down in the States. So this has come together to see a bit of a run up in the prices. And in fact, for canola, we're looking at 2-year highs. So it's something that when we see these market prices, we want to make sure that we're able to capture it, but at the same time, not wait too long. And that's the question: is what do we do? And this always brings me back to, I think this is a slide set from farm management specialists from decades ago, where it's what do you do? Is it canola's $10? Well, I'm going to wait for $11. Canola's 11. Well, I think I'm going to wait for 12. This market's going up. I don't want to miss out on this market. It's $9. Great. When can I haul? And I laugh at every time I see this and I see these price run-ups and sometimes the rationality of grain marketing goes out the window, because we want to be able to capture those high prices. And irrationality, maybe a little bit of greed because we haven't seen these prices in a long time. The fear of missing out on something like this can cause us to sometimes throw out that marketing plan, and that's not always the best thing. It's impossible to get the top of the market all the time. Whether you market the grain yourself or you use the best advisory service out there and you're paying the most for it, you're not going to get the top of the market all the time. However, if you know where your break-even prices are, you can identify that point of profitability. And there's going to be times in everyone's marketing careers, and I spoke to a lot of producers and they talk about, well, I got this, but then, it kept on going up, or even there's sometimes where, there is better opportunities out there. I think the key is not to dwell on those missed opportunities and learn from them and move on and continue to evolve and get better. But if you know your break-even prices and you know where you're profitable, and if you're able to sell into those points of profitability, no one's ever lost the farm selling at a profit. And if you're selling grain and you're making a profit, then good on you. And you're comfortable with what you're doing, then that's exactly where you want to be. And I don't think there's anything wrong with that at all. So talking about our cost of productions, the province has cost of production guides. We have our 2020 out. We're actually just doing our 2021s now, and they'll be out December of this year. They can also be found online if you simply Google Manitoba Agriculture cost of production, or go to our website here under production economics. You can see cost of production. We do them for a bunch of different crops and livestock groups. So this is where you'd find it, and we have print copies available as well. Looking at our costs of production over the last handful of years, I don't think it's a surprise to anyone to see that for the most part, these costs have been going up. In 2013-14, they're actually higher. It's almost solely due to the high cost of fertilizer in that time period. But the costs are just going up. Just to maybe take the pause and talk about some of the fixed costs that we have included into our costing budgets. It's pretty simple and straightforward for everyone to figure out what their operating costs are, what their seed costs, fertilizer costs, chem costs, things like that. Those are fairly easy to determine. But something that's harder to determine is what are our fixed costs. So what are our equipment costs and what are our land costs? Probably the easiest way to do it is to take your annual payments for equipment and land in a year and divide that by how many acres you grow for a cost per acre. That's the simplest way. That comes up with a cash cost per acre. It may not capture depreciation on equipment. If you're a producer that largely has your land paid for, it may not be a true indication of what holding that land is really worth or the opportunity cost, but at least it's a starting point to be able to determine where your costs are. And we'll see a little bit later in the presentation what we can do with this and some of the fun stuff. And I use air quotations around fun stuff because I understand it's cost of production and numbers, but some of the interesting things that we can do to see where our farm is spending the money and to see where our profit potential is, and also see where the clouds on the horizon, if you will, are for some of the negative things on the farm. Here's our 2020 cost per acre for the 6 major groups. We can see here that it ranges from just over $300, just over $500 per acre, depending on the crop. The blue is the operating, red is fixed, and the green is the labor in this cost. And we can, if we're going to say focus on canola, especially with these canola prices, you know, we're looking at all in over $400 an acre for all of our costs. So when we think of our yield and looking at our break-even yield for what we need for that crop to break even, when we look at our total costs on canola, for example, we're nearly at 40 bushels an acre. Now, in my area, I would say canola was average. We were definitely hot and dry, but the crop looked pretty decent. And some of the reports that I've heard is the guys were a little disappointed as to what was in that canola crop. Looking at it from the road, it looked pretty decent, but you know, it seems like most of the yields are coming in and around this rough average range. We can see where there's not a lot of money left on the table in terms of profit for the farm when we start looking at some of these numbers. If we flip over to wheat, in our area, wheat was pretty good, yields in the 70s. And again, it depends where you were and how many rains you got and what type of soil you're growing the crop on. But there it looks like, just because of the yields, that there's some profit there. So these numbers change every year. You should determine this on your farm, because it does allow you to have that sense of where your farm is producing at, where how close to the line, if you will, your farm's operating. So I think it's pretty important. I like to tell producers that we need to, you know, while it's important to think about cost per acre, we really want to turn this into what our break-even price is and how much of that price that we're getting is going to the different areas. So if we, in this chart, look at canola, for example, the blue bar is the operating cost. So about $6 a bushel is going into operating. We look at the total costs, which is the red bar, so that's including the operating, fixed, and labor. We're at nearly $10 a bushel as our break even to cover all of our costs. So if we can see in a year like this where, you know, we can see $11 and maybe even $12 for prices are a little bit further out, I'd start to identify that we have some moments of profitability here. If we look to the hard red spring wheat, where we're at, you know, roughly $6.50 a bushel for a break-even price, and if we're looking at average yields, we can start to see that the profitability is a little bit tighter in that spot. And you know, are we going to be able to get that? And knowing these things and looking that, okay, well, maybe right now the wheat market's a little cool, but the canola market's a little hot. And knowing when we need some of this cash flow, we can start looking at what commodity we're going to sell when, and what we're going to sit on in hopes of having the price recover a little bit versus what's in demand right now, to start making our decisions as to what we're going to do with the crop. A few tips. As the season moves along, we want to update our projected numbers to actual expenses. I find producers are pretty good in the off season or over winter coming up with what they think the cost of production is going to be. That helps everybody make decisions as to what to grow. It helps with securing trade credit or operating lines to know how much you're going to be spending, all those types of things. But I find that as the season progresses and as everyone's busy, not everyone converts these projected to actuals. And, you know, I'll just use in our area where there's some producers, because it was so dry and so hot, chose not to spray fungicide when normally they would spray fungicide. So it's to be able to adjust those numbers and to see, okay, well, what does my projected break-even yield or my break-even price look like with these different moves? You can use them for what if, but you can also use them to move towards actual. And as we get to harvest and we get through harvest, we can update our projected yields and turn them into actual yields, and then we can actually see where we're at, and we know with certainty what our point of profitability is, and it's a number that you can't hide from. It might be a number that has you feeling pretty good, or if the yields aren't so good, it might be a number that, you know, has you feeling a little down, depending on the situation. But whatever the case may be, you know what it is. And just like with any plan, you need to know where you are right now before you can develop the plan to determine how you're going to get to where you want to be. Some of the fun stuff that I like to do with this, and this is something that we're coming out with our 2021 cost of production, is that we can do our break-evens on both price and yield. And I'm going to just look at canola. There's quite a few numbers on the slide, but let's just focus on canola, especially with, again, these prices that we've seen. And if we look at that break-even price, we can see that now that I've entered in my actual yield numbers and I've turned this document into an actual document from the projected one that we're using previously, we can see that my break-even price over total cost is 10.03 a bushel. And why I like this breakout is it shows where my money's going for each bushel that I sell. In this example, 637 goes to operating, but $1.60 goes to land, and another $1.60 goes to machinery, and nearly 50 cents a bushel goes to the labor, and then if I'm running the farm, what I'm taking out of that farm. And it shows where this money is going out of every bushel that you're selling. So you can see in a situation like this, if we're at $9.50 a bushel market price, then the owner living is essentially you're working for nothing, and at least you're making your land and machinery payments, but you know you're not getting anything out of it. Where if we take a look, and if we're selling at $11, we can see that we're not only paying ourselves as the owner living withdrawal out of this, but we're also seeing a buck a bushel profit from our farming venture. If we go down on canola and look at that break-even yield, and it's the same type of mindset here, where our break-even yield, now that we know our actual numbers are 40.1 bushels per acre overall of our farm, we can see that almost 6.5 bushels an acre is allocated to land costs. Another almost 6.5 is allocated to machinery costs, and nearly 2 bushels an acre is allocated to the labor and owner living. And I think that this is, again, the fun, air quotation, fun stuff, because we get to see how much we're taking out in terms of dollars per bushel that we're selling or bushels per acre, but we can also see how much we're spending on our machinery costs and our land costs. Again, going back, that it seems to be hard to whittle down those operating costs. We can time our buying or purchases of fertilizer and seed. We can do some bulk buying, but it is harder to whittle that down. Where the easiest spot to manage your costs is usually machinery costs, and we can look here and start to do some what if with some of these numbers. If we're looking at purchasing some machinery and saying, well, how does this affect my break-evens? If I'm going to make a major purchase and I'm essentially sending 6.4 bushels an acre to my machinery, but it's going to be 8 or 9, is that a good move? Are we becoming more efficient with some of the decisions we're making? And that's again the benefit of cost of production. And then we can also see if we're going to be spending more on machinery, is that going to drive up our break-even price? Now, when we're marketing our grain, are we going to need to make sure that we're performing and we're not missing any profit opportunity? So it's pretty interesting. It's also a stark view of the farm, and there's nowhere to hide with these numbers, and you can clearly see where the strengths and weaknesses are. And everybody has strengths and weaknesses, and it's about to play to your strengths and manage your weaknesses. A few points on marketing within COVID. I know that there's been quite a bit of interest in this. I've had a number of publications reach out for some comments on this, and a number of producers asking about this. And right now that COVID really hasn't had a big part to play in this. The thing is that who knows what's going to happen, and you know, you couple this with the election in the States happening later this fall and everything, and there could be some wonky things that happen. We may see some increased price variability and volatility. I joke is that years ago, producers were scratching their heads when canola moved 5 cents a bushel in a day, and now we just shrug our shoulders and we're almost immune to that. The amount of change and volatility has gone up, and we've become somewhat accustomed to that. But we may see some more of it play out depending on what happens. But the bigger thing in my mind is the potential for grain delivery interruptions. And we've seen in the livestock slaughter industry what can happen with a slaughter plant being closed. Now with grain, it is different. We have more avenues. There's a lot more businesses to sell to. There's more movement methods. So it is a little bit different. But I think it's important to consider that something like this could come and affect the grain industry. So we go back to that marketing and identifying those cash flow requirements. When do we need the money and how much do we need? And I think it's reasonable just to make sure that we don't leave the sales and deliveries until the last minute of when we need that grain. It's, I guess, a little similar to when we have a bit of a grain backlog in the system, and it's elevators are always full and the rail lines are struggling to move the grain, and we can't haul for a period of time. I wouldn't want to leave this till the last minute. I would want to make sure that I'm able to market this grain, get cash in the account so I can meet my requirements well ahead of time, because the thing is, we just don't know what could happen. You know, a point to this is, you know, if we're selling grain a little bit sooner than what we normally do, there could be some tax management issues. Definitely speak with your accountants on this, but there are strategies to be able to deal with this, whether it be deferred grain checks or pre-buying inputs or whatever the case may be, that there are some tools in the toolbox that we can manage this. And I think that, again, having cash in hand in the bank with sales is better than having a promise that they can take some grain and then having something throw a wrench into that plan and then having to scramble last minute to meet those cash flow requirements. There are cash advances that are out there, short-term operating, that producers could use to meet those requirements should the need arise. But whenever you incur debt to cure a problem, you're just creating another problem. So that would be kind of the last line of defense. Plan A would be to make sure that those deliveries get made in a timely fashion and not leaving things to the last minute. You know, plan B might be looking for some short-term operating or something like this. So there's definitely options out there, but I don't think this year is the year to leave things to the last minute. So a few things, but when I'm wrapping up the presentation here, our department's funded Farm Management Canada study on strategies of successful farmers. And I would say this is probably strategies for successful business. And whether this be marketing plan, whether this be farm succession, or whether this even be production management for growing your crop, these strategies I think are very important. And the first thing that they found with the most successful farmers was that there was a dedication to lifelong learning. So if you're on this webinar, this is a great platform to be achieving this. And so congratulations, you've checked number one off. But that's hugely important, is that the most successful farmers are always learning. Secondly, is that business decisions are made with accurate financial data. So we can see here with some of these numbers that we've come up with, that if we know what our break-even cost per bushel is, we have we understand what the market is doing. We're using a market advisory service to help us with this. We're using our actual numbers. We're making the best decisions we can because we have that accurate data. The third, seek the help of business advisors and consultants, and that's where the market advisory services come in. If you're not comfortable with something, engage them. And the amount of risk on these farms and the amount of dollars with what we have tied up with land and equipment, never mind the operating budgets on these farms, there's huge money at play. And it doesn't take much to be able to justify the use of a business advisor and consultant. My advice to that is to be able to use them with accuracy, going in and using them for specific purposes, rather than going to them with a broad question saying, what should I do? You'll get a lot more satisfaction of having focused conversations and with focused results. It'll be much better interaction. Have a written plan, follow it, review it annually. Not a lot of producers have written marketing plans. Some do, but writing it down allows you to refer to it. It allows you to keep on coming back to it and making sure that you're following your principles. And if we go back to one of the first slides of what's our marketing plan basics, it's about knowing our break evens, knowing when we need cash flow, knowing where the risks are. If we even put that down onto one piece of paper, where we have something that's a lot more grounded and rooted for us, so we're able to follow that, especially when things get hectic, when things get stressful, and it's a little bit harder to think with a clear mind. 5, know your cost of production. Again, our department does a lot of work with this. It's the foundation for everything from marketing to profitability to farm succession. Everything is rooted of this, and it's hugely important. Assess risk, have a plan to manage and mitigate it. And of course, marketing is a huge part of that. And finally, using a budget and financial plan to monitor your financial position and your options. Again, knowing where you are in your strengths and weaknesses on your farm with finances allows you to be able to make decisions with marketing. And while the canola markets have taken a small step back today, and whether it's going to continue on, we've seen some great gains in this. And the question for a lot of producers is going to be, do I get aggressive with selling at these profitability points, or do I defer and see what's going to happen in the future and sit on the grain? A big part of that depends on where you are financially and what you're able to do, and then you can make an informed decision. So with that, Lionel, that wraps up my presentation. There's my contact information. That number at the bottom is also myself. Feel free to text me, but definitely open to questions even after this. If someone wants to reach out, that's fine. And always open for feedback on our cost of production. I'm one member of a team of 2 that does our crop cost of production guide. So definitely interested in any feedback that people may have. We're always trying to make it better for everybody.
Okay, thanks, Darren. Do have a kind of a broad question for you. A lot of talk over the last I guess, a year to maybe year and a half now is China actually buying from us? And if they are they in the market, or are we just seeing shortages are selling to other countries?
Well, from what the market advisors that I've seen and from what I've heard, that they are, but they're not doing it through the conventional methods. I think to take a step back and realize what China is and what China has to accomplish. We've seen in the past, before we've had these trade interruptions, before Huawei, before all this stuff, they were a huge buyer of commodities. Because they choose to do something politically doesn't mean that they still don't need that stuff. And China has, I don't want to say weaponized their political system, but you look at what they're doing with Australia and barley, and they've put on a huge surcharge or huge tariff on the on Australia barley, and they've are taking these fights on the trade front. You see what's happened in the States with China, and just recently China won a WTO hearing saying that the States illegally put tariffs on a bunch of products. And so this is, it's almost a little bit of economic warfare. But if you clear all that clutter, they still need stuff. They're repopulating their hog herd. They need feed for that. They developed a taste for canola oil. So at some point in time, there's an equilibrium that has to happen, and I think that there's a lot of posturing, and China's not stupid. They can posture and probably drive the price down and be able to make some purchases. So, China is still a big player in this, and there's just in the soybean sales, they've come into the States and been reportedly buying up a bunch of soybeans. So they're still buying. Maybe it's not through the conventional methods that we've seen in the past, but animals still need to eat and people still need to eat. So it's important to that. So when we're marketing, we got to be able to survive the spats between countries when it might put pressure on these prices. And then at the same time is that when we do see these rallies, we need to be able to profit from them.
Okay, and then this question just came in. When you go back to your, I think it was the chart that you had it broken down to dollars, and then you had it as to yield, as to where it goes, and the barley was red. So if that comes up red, that's saying that you need to sell at a higher price?
Yeah, so what this is essentially the break-even yield risk ratio. So this is what our target yield is per acre over our break-even yield. So I'm going to use canola and then I'll go to the barley, but let's just say canola. And in our document, I don't have it in the screenshot, but essentially our target yield was 42 bushels an acre. So what we're trying to do is we're trying to grow a 42 bushel an acre crop. This is something that's been supported by our historical yields. It's not outlandish. It's reasonable on this farm. So that's what we're trying to do. So what we can see here is that because our target yield in canola is bigger than our break-even yield, we have a positive or a green number. What the barley number is essentially showing is that we're not meeting our costs of production. It means that we're in this case, we are selling at a loss. So if we want to be able to bring that up to even 100% so equal, we need to sell at a higher cost or at a higher price. So, and that's using these numbers. And the biggest thing is what our yield is. So if we go and we look at, say, our actual yield, and I laugh, probably what was the saying, that the most profitable farms are the ones with the biggest yield? Well, it's like saying the richest people are the ones with the most money. But that's where yield is a huge driver in our profitability. And it's something that we've seen with barley. We've seen the hard red spring wheats. We've seen the genetic improvements and the amount of money that's gone into that, where maybe it hasn't gone into barley as much. And we've seen some of those yields lag a little bit. And again, it all depends on where you are. Some people grow great barley, and that's why they do it, because they're able to grow great barley and make some money. The important part here is to know where your moneymaker is and where it's not. And for two reasons. One is if it's in winter, you're looking at crops to grow, and I see these numbers and I'm looking at barley, and this is my farm. I'm thinking I'm probably not going to grow barley because on my farm it doesn't work. But if I put in my numbers and the barley number is great, then I am growing on my farm. It all depends. But then as we move throughout the season, we go to our actual harvested yields, and we have our actual costs in there, and we can see this number and we can say, okay, well, yeah, your caller's right that we need to see a little bit more money out of this market in order to get it. And that's easier said than done, especially if the barley market has cooled off. So it's, but at least we know it. That's the thing. We know that if we're a little short on our cost of production and we need a little bit higher price, we have a choice. We can either sit and wait and look at the market and try to predict what's the best move is, or if we're selling at a loss, at least we can crystallize that loss and we know what it is. So it doesn't come to haunt us when we go and ask for an operating loan from the banker and he says, oh, you've lost money, so no, you can't get it, or no, you need to restructure. At least this eliminates the nasty surprise down the road.
Okay, thanks, Darren. And just one more comment for, I think it's yourself and Roy that work on the cost of production.
Yep.
The comment was you guys do a great job. So
yeah, thanks, appreciate that. We love doing it.
Okay, thanks. And if there's any more questions, you're going to hang on till the end, are you?
You betcha.
Okay, thanks. Lori, if you can do just that, thank you. And now we'll go to our crop scouting panel, and we've got a few questions that have come in this week, as well as a couple that I've seen in the field. And so as you see at the bottom of the screen there's the contact information for getting your questions to us. So feel free to get a hold of us and get your questions in so we can get this group to help us answer them. First one I'm going to give to start with Dave Kaminsky, and just this is a picture I didn't take this year. I took it probably a couple years ago, but we're seeing it in the field, and I was just wanting maybe Dave to maybe explain what we might see happening to the sunflower plant.
Okay, Lionel. Well, that condition is either known as cat face or fasciation, and both of those things can be the result of injury or a genetic mutation. Those are a couple of the causes that I know. There may be others. I wonder if it's just oddity within that field or if there are many of them.
There was at the time I took the picture, there was a couple anyways. If you looked, you could find them.
Sure, but not an economic consequence.
No, definitely not. No. Mm-hmm. One of the things I did look up on was that it may be even caused by an insect. So I think John Gavloski's on. John, have you seen this and maybe seen an insect damage like this?
Indirectly, there is an insect connection. One of the causes of those symptoms is aster yellows. When sunflowers are infected with the aster yellows phytoplasm, their hormonal balance gets a bit disturbed, and they end up producing bracts and ray petals, often in wedge-shaped patterns like this, right on the head. So these are certainly potential symptoms of aster yellows infection. Now, this year was not a bad aster yellows year. There was some movement of aster leafhoppers up late in the season, a little bit around, but not much. Usually not a huge problem in sunflowers, but sometimes you do see this happening.
Okay, so that might explain, a couple of years ago, we did have an aster yellow, I'm not going to say problem, but we were definitely noticing more of it those couple of years ago. So that might make sense then.
I guess you should have asked John instead of me, Lionel.
Oh, no problem. I was thinking, I wasn't 100% sure what it was. So anyways,
If it was after yellows, that is a disease, but it's vectored by an insect.
you bet. Thanks, you guys. The next one is for Anne. Anne, we're getting closer to some of the seeding deadlines for the fall crops. Question was, what is the deadline for winter wheat? We've been hearing some stuff on the radio of extension. Any comments there?
Yeah, there was an extension that was approved just recently. So the full seeding date deadline for fall rye and winter wheat is August 15th to September 25th. And then the reduced, so the 80% coverage is September 26th to the 30th. And this was based on a desire from the Winter Cereals Association to change the deadline based on what they've been seeing in the field. And so Yvonne Lawley at the U of M did a whole bunch of research with many different sites looking at the yield and plant stand consequences of extending the seeding date. And based on her research, we found that it was justifiable to extend the deadline.
Okay, so that's good. I also got the 2020 yield data on the screen. Any comments on any of the newer varieties?
I'm out corn scouting right now, so I didn't look too much into the newer varieties and other than putting the tables together the last couple of weeks. But yeah, I just encourage everyone to go out and check the variety information and the yield data. And when you're looking at those yield results at each site in 2020, I encourage people to look at the variety description tables as well to see how those yields do compare over a number of years to different varieties, because we always do caution people, if you farm, say, near Beausejour, I do caution people to just look at that one site year of data in Beausejour can be misleading because, we could have had an anomaly. So I do encourage people to look back and also look at the data that's been collected over a number of years.
Okay, and that's a good point, because when you look at some of the data this year, yields are probably lower than normal, right?
Yeah, I would say that yields are lower than normal in some areas. So like just looking at this screen here, Beausejour, Melita, Carmen, Winnipeg, and Hamiota, I would say those, or maybe not Hamiota, but those yields would be lower than we would have expected. So yeah, I think it's good to compare varieties, but I just do caution looking at just 1 year of data.
Great. Thanks, Anne. Thanks for phoning in. The next one's for Dennis Lang. Amir and myself were out this week after the frost we had. I guess it's been about a week now, and been opening up some pods of soybeans, and maybe just wanted to get you to maybe comment as to a couple of the samples you see there and what you might think is going to happen in the long run for some of these fields.
Sure. If you want to show my screen, I've took those photos and incorporated into a bit of a PowerPoint here. So
perfect. Lori, can you do that, please?
Okay, we're just going to open that up. Go into this mode. There we go. Okay, so this is from last week. I'm just going to start off a little bit from last week here, and what we're looking at here, 3 different pictures here. Tuesday morning, you can see here on the left-hand side here, some soybeans in the west here. Leaves are clipped pretty good. This is around the Brandon area. Dry beans in that same region as well, dropping leaves, and just west of the escarpment here in Morden here, some dry beans here that were hit pretty hard. Going to the next slide here. Thank you for Amir for sending some photos, and as well as Lionel as well. I have some of those in here as well. These are from our plots in the Hamiota McVet or MPSG site. In this mix, what I would look at is anything that is this dark greenish color. Those ones would be considered frost damaged. Now, what will happen with these is they're going to dry down and shrink up in size by the time the combine goes through. So yes, there will be some frost damage in some of these, but overall it looks pretty good. And this is what kind of the pod looks like when you split the pod open. These ones here look fine. They look their natural color. They're still green yet, but they haven't dried down. You are allowed up to 3% for number 2 Canada damaged seeds. So, and again, they go by weight. So once these shrink up a little bit, they won't be as bad as what one might think. Now, saying that, if your beans are at the R5 growth stage when you hit that frost last week, there I could see a substantially higher amount of damage than that 3%. A couple other pictures here, the Lionel sent here. Same idea. You can see here in this mix here, there's some mature seeds in here. This one's still drying down here yet, but you got some that are in its normal shape. And this one here, they all look to be very sound beans. They're still green yet, but that's normal for this time of the year. They're in the process of drying down. Go to the next slide here. This is a dry bean photo, and I thought I would throw this one in. So the picture on the right here is what is the picture I showed you earlier, day after the frost. The grower actually went in to harvest those beans a couple days ago. You can see here on the dry beans, all these yellow ones are considered frost damage. So it's overall, they stand out for sure. There are a few in here that they don't have their natural white color yet. So the amount of damage in this sample was about 6%. Now, it's not 6% of the yellows, it's 6% of it's the yellows and some of these ones that I haven't turned color yet. So it's still a marketable product yet. When you clean all this out, the beans still look pretty good. And that's one cautionary note I would give for dry bean growers, is that if you're looking at harvesting navy beans, make sure these samples are nice and dry. That way, you don't stain the beans and you still get good quality beans. So overall, different areas that I've been in, go to a couple other pictures here. We had a little bit of frost in the Emerson, Dominion City area last week as well, just a -1 for about an hour. Went in to look at those beans this week, and what you see here is you can definitely see the frost damage. Those leaves have crisped up, but when you look down into the canopy, it's still quite green yet. So those beans typically will finish off. To give you an idea how the frost did affect it, there's some volunteer corn plants in there that you can see the leaves got clipped pretty good. Overall, pods look normal in this situation, all yellow. This one here might just kind of shrink up because it was just maybe not quite mature enough, but for the most part looks pretty decent. So, and again, here's a close-up of the pod. That browning is kind of normal maturity. So when you pop open those seeds, everything looks pretty good. One of the other things I wanted to kind of point out, we'll go back up here a second here. There we go. Amir sent me some other pictures as well from the plots. So this is from the Hamiota site. So we have 3 different varieties in here. We have, and this was taken within the last couple of days. So Accurates, which are going to be a new check, it's a mid-season check. When that frost hit last week, it really clipped some of the leaves off. So they were still not quite, they were definitely a lot greener than, or not a lot more immature than what some of the other beans were. One of the earliest ones we have in here, this Freshco, that was pretty much 95 brown pod at that time already, so that should be pretty good. And then we have one that's in a longer season group. So here, even there, yeah, the leaves are drying off, but I think overall with all 3 of these, the quality of the beans should still be okay, because there was either it was far enough along maturity-wise, or there was enough leaf material to help protect it. So we'll see when we pull into it. We might see a little bit higher damage in some fields that weren't as far along, if you were in the R5 growth stage, or depending on how much frost you have. But overall in Manitoba, I think we should be pretty safe for the amount of frost damage that we have. So that's all I had here for today. But I'll turn it back over to Lionel if they have any other questions.
Okay, Dennis, just one follow-up. Okay, you said that when you had Amir's picture up there that you would still make, you're allowed 2%, you said?
You're allowed 3% for number 2 Canada.
Okay, so
yeah.
What happens after 3%?
Well, there's different grading scales. So what happens is when you're at number 2, if we go to, there's a slide that I have here. I'll go down a little ways here. It should still be in the mix here. And there you go. Okay, so for number 2 Canada, you're allowed 3%. For number 3 Canada, you're allowed 5%. And number 4 Canada, you're allowed 8%. So that's your, and how elevators will price that will depend on where their markets are at and what they can do with the product. We have had in the past high damage, not because of frost, but because of, well, it was a green seed issue, but it was due to the fact that the certain varieties dried down too quickly when it was hot and dry, and the green seed got locked in. And there were some beans that were in that 5 to 8% range, some even higher, but growers were still able to market those beans with very minor discounts once things all settled down. So I think we're still okay yet. So.
Okay, great. Thanks, Dennis.
Thanks.
Lori, if you could give the screen back to me. One for John Hurt. Looking at putting on a large amount of elemental sulfur this fall, is this the right move? And I think that he was talking 200 to 300 pounds an acre.
Okay, Lionel, I wish I had the information for him. You know, there's been a lot of work on elemental sulfur, on how to use it. And I think that there's been a body of research that shows that we can get it working when we apply it at, you know, modest rates in a regular program every year. And we can establish good sulfur levels in that soil. There's much less research been done on these batch applications, you know, kind of using brute force to make it work. So intuitively, you would think that you're going to get several years of application or release once it degrades to sulfate. I guess the coaching that we have is I like to see it broadcast. When we think of elemental sulfur, we have to plan to do the opposite of what we would do to manage nitrogen. So because with nitrogen, we try to minimize microbial activity. With elemental sulfur, we need to maximize it. So we broadcast, we leave on the surface with elemental sulfur. If we band it or put it in the soil, we reduce the rate of oxidation. And we want to apply it when it's as warm as possible. You know, there's very little, no oxidation under 4 degrees C. It maximizes at 40. And every time the temperature goes up 10 degrees, we double the rate of oxidation. And so having sulfur on there during warm conditions is beneficial, whereas that's harmful for nitrogen. So, you know, we know about some of the practices in order to encourage the oxidation. And I guess the fallback is if people are doing this, there's a good probability that it will be available for use by future crops. But we always have ammonium sulfate or ammonium thiosulfate up our sleeve for quick fixes if we observe some deficiencies, for example, showing up in canola.
Okay, good. Thanks, John. Lori, if David's ready, could you turn the screen over to him? I think he's found something about the asters yellow in the sunflowers for us. Okay, David, we can see your screen.
Can you?
Yep.
So as John said, this is a disease that can be vectored by a particular insect, the aster yellow's leafhopper generally. And this is a reference that I found from just searching the web on aster yellows in sunflowers or those kind of symptoms. So that's something you can do too. And there's the reference.
Oh, okay. So that some of those pictures definitely look familiar.
Mm-hmm.
Okay. Well, thanks, Dennis. David, sorry.
No problem.
And Lori, if you could give the screen back to me. I think that's it for the questions this week. So just a few finishing slides. hay listing service, I think, is important. We still have areas that are short of feed, so if you got hay, definitely get your information on there. Crop residue burning, you're hearing that on the radio as well, so make sure you're checking to make sure your area has approval for burning. The production extension specialists in the province listed there, so if you've got questions, definitely give these people a call. They can get you your answer. And join us next week, September the 23rd. And got a feeling we'll have quite a bit more harvest done. So thanks for attending.